Hey everybody, welcome to the live stream. Today is Tuesday, I'm not even sure what day, 28th, so the end of July. This is the channel where we talk all about options trading, selling options, selling puts, selling covered calls in order to create weekly income so you can live an amazing lifestyle. I have a different view today. I'm just chilling on the couch in the sunshine, it's not up high, it's kind of low. But yeah, anyway, put your comments in the chat here. This is a great opportunity for you guys to get free information, free help on options trading. And so what we're doing on this live stream in particular is going through the account that I've been showing you guys, not just putting a trade on, but how to manage it over time. And I wanted to talk about a couple of things specifically today that has had some controversy over some time. I was just looking at my phone now, and someone's comment that talked about buying more shares after it comes down. Yesterday there were some comments about rolling. Rolling continues to be this source of controversy. So I wanted to kind of really speak to some of that today in this session, as well as go over the account. And I think as we go over the account, I'm going to show you guys exactly what I'm talking about, because it's not about making money for 1 week, 1 month, 1 year, whatever. And also it's not about making money if the market's going up. Listen, anybody can make money if the market goes up. Like you don't have to be good at anything. You don't have to, have a solid process in place. You don't have to have, good rules that you trade by. When the market goes up, it's kind of like the tide. The tide goes up, all boats rise. It's kind of the same thing. But what you want to do is you want to make sure that you have the proper things implemented in order to be successful over the long period of time, over all kinds of market cycles, not just up markets, but what happens when the market goes down. So let's kind of jump into my account here, and I'm going to show you guys what I'm talking about. I think you guys can all see my screen if I'm not mistaken. Let's start with this, because literally right before I opened this live stream, I'm reading this comment on my YouTube. If a stock went from $100 to $80, you aren't getting any premium for a covered call after a 20% drop. Like it at 100 and love it at $80 makes sense in theory, but blanket statements like that make no sense. So I want to specifically, I'm going to answer this as well on YouTube, but I want to specifically answer this question and this type of question, this type of comment on this live stream. Listen, it's not a premise that works in theory. It works in reality. And I'm going to show you exactly what I'm talking about in this account that I'm trading live to you, that I've been trading live to you over the past, 2 months or so and counting. Number one, the most important thing is to make sure that you select a good stock. That's the foundation of everything that you're doing. You don't want to be trading some meme stock, bum stock kind of thing because you got mesmerized by the implied volatility and the super high premium. No, you want to make sure it's a good company, right? And let me show you exactly what I'm talking about. So here's an example. Here is my account. I think you guys can all see my screen. I have 200 shares of Oracle right now, right? So the average cost on those shares, as we can see here, is 181.27. You guys can see me, right? Now those 200 shares came from 2 different lots. I bought 100 shares early June for $244. So, oh my gosh, I paid $244 a share, and then the stock dropped significantly, right? Right now, the stock is trading at $121. Recently, the 24th, last Friday, in fact, I bought another 100 shares at $118.33. And the reason why I did that is because if I like the stock at $244, which I originally bought it at, I still like the stock at 118. In fact, I like the stock even more. Now, the person that posted this comment, "Are you really?" That's an interesting YouTube name. He said, or she said, that it makes no sense. It does make sense, and I'm going to walk through it with you. Now, it's valid that this person says, okay, like if I buy the shares at 244 and the stock drops, you are absolutely correct in that I'm not going to make a lot of premium selling a covered call because it's too far away from where I own the shares, right? So how do I combat that? I'm showing you, here's how I combat that. I buy another 100 shares, which I do here at 118, and then I sold a 119 call. I think I sold this Friday, and I got paid $330 for that call. So now here's what happens on Friday, because this is a 7/31 this Friday expiration. One of two things is going to happen. Oracle is going to be higher or lower than $119. If it's higher than $119, these shares right here are going to go away. They're going to get called away from me. I paid $118.33. I'm going to sell them at $119 because that's the strike price, and I'm going to keep the $330 in premium. If the stock goes down, right? So like right now it's already over 119, but let's say it dips down and I keep my shares and I don't get assigned, I'm going to sell another call on that lot next Monday, next week, and take in income again. So here's the thing. It's not freaking theory. It's reality. If I like the stock at $200, I like the stock at $100. It's the same company. It's the same fundamentals. Something may have changed, so you have to do your own due diligence. Okay, well, why did this stock dip? Like, are they about to go bankrupt? You want to like look at that, but 99 times out of 100, there's nothing fundamentally wrong with the stock. Stocks go up and stocks go down. This is not a channel about timing the market. I'm not a person that's going to stand here and say, you know what, I think the market's going to go up, so I think you should, sell this put, or I think you should buy this stock, or I think you should do this, or I think you should do that. I don't know where the stock or the market or anything is going to go tomorrow. I don't. And I'm not pretending to know. What I'm doing is creating income on a regular basis. And this is not theory, it's reality, and it absolutely works. Further, that brings me to my point about rolling. Listen, if you guys want to roll your puts that go down in price and you don't want to buy the shares, that's totally fine. You are responsible for your own decisions, right? I can only say, hey, here's what I do, and here's what works for me. And by the way, it's been working for 29 freaking years, and I live like I didn't even take a shower yet. I went to the gym this morning. I'm just chilling in the sun on the couch. I don't punch a clock at a regular job, and I'm not bragging. I'm not saying that to impress anybody. I'm saying that options can absolutely change your life, change your lifestyle. And my intention on these videos and this live stream is to help you make smarter decisions. Ultimately, it's your money. You make whatever decision you feel best about. But when I sell a put, I'm okay getting assigned those shares because I think through two things ahead of time. Actually, three things. I think, what's this ticker? Do I like the ticker? Is it solid long term? Number one, that's the most important thing. Number two, I'm already thinking ahead of time. If I sell a $200 put, am I okay buying these shares at $200? If the stock goes down and it's like 180 and it's about to get assigned, I'm not going to freak out. I'm not going to buy my put back and spend more money than what I got paid, book a loss because that realized loss hits your pocket, and then kick the can down the road and like say, oh, I'm hoping and praying that it's going to turn around and sell another put on that ticker. I'm not doing that. Assignment is a part of the plan. Listen, I don't really say a lot about the wheel because I feel like that's like a overused kind of a little bit on the cringy side terminology, but really what we're doing is we're trading on the wheel basis. We're selling puts on good quality stock that we're okay buying if the price goes down, and if it goes down, we're taking assignment. That's part of the process. That's part of the trade. We're selling a covered call on those shares. If it goes down further, we're keeping cash on the side to either sell another put or maybe buy more shares as it goes down, because if I like the stock at 200, I like the stock at $100. So you can listen, you can not listen. If the channel's not for you, it's totally fine. There's lots of channels. I don't make that much money on YouTube. I'm not doing that for the money. I'm doing this for a mission. Like it's like I know how life-changing this is, and I genuinely help tons of people. And so so that feeds my ego a little bit as well. So with that said, just to walk through like this oracle, that's kind of how that works. And also, let me walk through one other thing. So I have these 100 shares of HPQ, right? So I have 100 shares of HPQ that I paid $26.82 for them. So originally I had gotten assigned on a put that I had sold. It was a $27 put. I bought the shares. The cost basis got adjusted to reflect the premium I got paid for the put. And then and then I sold the covered call, and I sold the covered call a few times. In fact, I have this $27 call that expires this Friday. I only got paid $14 for it, so not that much money. And right now that's trading at $150, right? So sometimes people, and I'm just going to keep talking a little bit about rolling. Sometimes people say, oh my gosh, like it's a $27 call. Now the stock's at $28.29. Why don't I buy my call back and then roll it and sell a new call next week? Bro, I'm not doing that. And here's why. Because if I bought this call back, I'm going to buy it for $150. I only got paid $14 for it. It's like, I don't want to like buy high and sell low. Like I don't want to receive $14 in income and then buy that same thing back for $150. Why would I do that? I'm just going to let the shares go. So assuming that the price stays over this $28 Friday, I'm going to sell my shares. It's good. There's a million trades to look for in the market. There's a million tickers, there's a million trades, there's a million setups. There's no shortage of that. I'm not like gonna hold on to things because I'm greedy, because I think I might make more money. I'm just doing this for income. And as we talk about that, let me show you what I've done in income on this account. So since I started this account, I've done $5,557. Now, this isn't a paper gain. This is a real gain in my pocket. That's the biggest difference between like a realized gain and a paper gain. Who cares about paper gains? You can't do anything with that. A realized gain is cash that you take in that you can spend. The last 7 days, I've made not that much because I haven't really been putting a lot of trades in. I've been teaching you guys on this channel a little bit more, and plus a lot of my tickers have gone down. Here's the thing, even if things go against you, like your tickers go down, it doesn't mean you lose money. I still made $312, right? The past 30 days, I still made $490. Worst case scenario, you don't make as much money when your stuff goes down. But that, again, is why you want to keep cash on the side to sell another put if it goes down, buy more shares, then you can sell a call to that lot. Now, by the way, let's go back to Oracle for a moment, because I have 100 shares at, actually, here we go, 100 shares at 244 and 100 shares at 118. You have to understand what the requirements are to tag that lot to whatever contract gets assigned. So let's just talk through that briefly, and then I'm going to go through some of the comments and the questions on here. Let's say Friday finishes, right? And Oracle closes where it is now, over my strike price, which is 119, and my shares get called away. I need to let my broker dealer know that I want to tag that contract to this particular lot. If I don't do that, they're going to choose which lot to tag it to, and I don't want to tag it to the top one because I don't want to take a loss. My trading is all about taking realized gains over and over and over again. There is an occasion, sometimes maybe you take a loss, you made a mistake, something happened, you change your mind, whatever. So it's not like you never do it, but you rarely should be taking a realized loss. In fact, if I go back to my realized gain loss, this is of all time of this account that I had started, $5,500 in income, and I took a realized loss of $4. I just don't do it because the most important thing is realized gains. I don't really care about what the paper account value is or the paper fluctuation. I make sure I have cash on the side to buy more shares of good quality stocks that I like anyway, and now I can sell calls against that lot, and that's how this works. Okay, so let's go through some of the questions. So Lorena says, hi Michelle, looking at selling another cash secured put on Bloom Energy as it has gone crazy on the premiums. Currently holding BE at 148 and looking at 135. Any thoughts? So here's the I think if I'm not mistaken, Bloom Energy, the earnings is coming out today. So let me just BE earnings date. Let's just ask Google, July 28th after market close, right? I'm going to look at it real quick in Thinkorswim, and I'm just going to take a look. The premium, you're right, Lorena, the premiums have been uber high. Right now it's down 12%. So look at Bloom Energy. It's kind of come down off this high, like sliding down a hill as if. If we look at the, let's look at like July 31. If we look at the implied volatility for something like at the money, right now it's trading at 165, 300%. So 300% implied volatility. And let's go one more step. Let's look at the trade builder and let's see how much the rate of return is, because we don't want to just look at the dollar value of a contract that we're interested in selling. We want to annualize that, right? So like, let's say, for example, I look at July 31, and I think your specific question is looking at a 135. So let's analyze that and let's do that together. So this app is amazing. If you don't, I know Lorena, you have the app. So bravo to that. Other viewers in the audience here, if you don't have the app, you should get it, because it makes your decisions that much faster, that much more efficient, that much more accurate. It gives you a lot of help, and there's a 7-day free trial. There's always a link in the description in case you want to know more. So here's what we look at. So if we look at a 135 put, now that has about a 21 delta, right? So 21 delta is like a 21% likelihood that it's going to go below the price before the contract expires. Now I wouldn't necessarily like depend on that particular delta, because the earnings is coming out later today. And when we see this super high annualized rate of return, anytime we see something that might look too good to be true, that should give us pause, and we should say, well, what might I be missing, right? So it's important to kind of think, okay, like 500%, the market is probably anticipating a super significant, perhaps a significant gap down. I personally, especially if you're already holding BE at 148, I would for sure sell a call. Like, let's see how much a covered call is going for. So in the same module here, let's see, Bloom Energy 148. Oh, it's much higher. So do you already have a short call? I personally don't usually have shares of stock without also having a short call tied to that lot, because I'm doing it for income. So I don't really want or really need to hold shares. In fact, I prefer to hold cash and drive income off of cash. So if it were me, I would be selling like a 165 call right now. So like, for example, you own 100 shares at 148, and let's say you want to look at a 731 contract. You can sell a 165. You can sell a 165 call that's going for $1,700. And look at your rate of return, 2,800%. Hopefully, oh wait, you meant to say a 148 cash secured put. Okay, so I misread your message. So thank you for clarifying that. You want to be conscious of position sizing. So if you're already holding 100 share, or not holding 100 shares, but you're already short a 148 put that expires Friday. I mean, it depends on how much money you have in your account, but you want to be able to leg in after drops happen. So you don't want to go too big too fast on your initial or at the beginning. You want to keep, like they say, dry powder. You want to keep dry powder on the side to be able to sell another put if it drops significantly, because the market is anticipating a significant drop a significant pop. I mean, that's the purpose of the implied volatility being 300%. It's like, oh my gosh, this is going to like really go high, super high, or this is going to really go super low. So if it were me, I would probably wait. I like to be more conservative. I think it's really easy to make money and it's harder not to lose it. But let's say let's go over an example. Let's say you don't even have any Bloom Energy. You could just buy 100 right now because it's down. What did I say it was down today? 12%. So that's a pretty significant drop. I mean, there's no right or wrong in a lot of these things. It's kind of like whatever like is right for your own personal situation and the intention that you're trying to trade with. So like, for example, if I was to buy 100 shares and then sell a covered call right away, let's see. Right now, Bloom is at 165. If you sold I wouldn't sell a 165 call, but I would sell like a 167.50 call, let's say, as an example. And if you did that, that's paying $1,600. So $1,600 gets dropped into your account. You're putting up $14,000 in capital if you were to buy 100 shares now. This is not really related to your question. I'm just kind of expanding on Bloom Energy, kind of how we would look at trades if you don't already have shares and that sort of thing. And by the way, a lot of times people ask me, you know, when I do a video or when I talk about something on this live stream, did you take that trade? How did that work out? I'm not taking all these trades. I'm giving you a lot of examples because these strategies really is two strategies: sell a put, sell a covered call. That's it. Like two basic strategies. Once you know the fundamentals of those, like that's 90% of what you have to learn. And they work for all tickers. Like they work for tickers like Bloom. They work for tickers that are more expensive, like Tesla. They work for tickers that are way cheaper, like, I don't know, whatever. They work for any size account, big or small. These are the steps that I walk through. Okay, I would have to put up $14,000. You know, if I buy those shares and sell my covered call and those shares get assigned, I'm making 1,300% on my money. Now, again, a big number like that has to make you feel pause and say, maybe there's something I don't know. Maybe it's possible that the market is anticipating a significant gap. And when a gap happens, by the way, a gap is like tomorrow, let's say, when the stock opens way lower than where it closed today. So you don't want to be stuck necessarily in that. So these are the ways that I kind of think through a trade and talk through that. So if it were me, I would go way out of the money, or because earnings is today, maybe wait, tomorrow. The time to do a trade like this was, I don't remember exactly what the trade I was doing. I think I was looking at a 731 $105 put or something like that. Super out of the money a week ago or so. I think I did a video or two on that. So hopefully that's helpful. Riro says, hi, Michelle. Some people like to take cash secured puts 30 to 45 days out instead of weekly options because of theta decay. Do you worry about that? So that's a good point. I don't look at theta. I don't look at other Greeks. I look at delta mostly. Delta is the statistical likelihood it's going to drop below. You can look at a lot of things, right? You can look at, I mean, when it comes to trading options or stocks or whatever, investing in general, you could look at a lot of things and make it as hard as you want it to be, or you can just like slim it down. I try to look at the most important things. So me personally, I have a few videos on this. I just did a video recently. Let me show you. I think it's here. Let's see. Right here, selling weekly options for income, why weekly puts beat monthly. So this was posted on July 24th. I encourage you to check that out, but just to kind of give you a quick synopsis on why I like weekly, two reasons. Number one, I want to create weekly income. I want to get paid every week, and I don't want to wait a month to get paid or 6 weeks or whatever. And number two, I don't know what's going to happen to that ticker tomorrow or the next day or whatever. I don't want to be tied up, have my capital tied up for 6 weeks at a time. I find that those are annoying trades. In fact, in this account, if we go back to my positions, I have this SpaceX position here because I had gotten assigned. So I had sold a put initially when SpaceX first IPO'd, and they were only doing monthly options at the time. They didn't do weekly, and I just wanted to show an example. SpaceX, new IPO, big, IPO, a lot of hype and such. And so I sold that put, and then I was like sitting around, with my thumbling my fingers as the price went down because I was stuck in that trade for a month. So it might work for you. There are some scenarios in which longer term trades do better, like or there might be a better fit for a longer term trade. Like, for example, let's say you work a regular job and you don't want to be looking at your stuff every day, and you want more of, let's say, a set it and forget it sort of mentality or process. Maybe you want to look at 4 weeks, 6 weeks, or whatever. Let's say if a stock is really, really, really cheap, you might want to look at, I'm going to use MicroStrategy. I haven't traded MicroStrategy in a long time, but that used to be one of a big holder of mine. And if we look at that, here's just a chart, right? So it was, $400 all the way down to less than $100, kind of sideways right now. And if we looked at, let's say, let's go to here. Let's go to the short put calculator. I'm going to show you this. And I'm going to type in MicroStrategy here, MSTR, and I'm going to go far out because the ticker is super, super cheap. Why can't I go far out? I think I can go out far out on this one. Let's see, MSTR, and this is a similar module. It's just a trade builder, but it's going to show me the rate of return. So let's go super far out because the ticker is so cheap. What I'm thinking through in my head is like, Michael Saylor, he's still uber smart. Bitcoin is still like very good long term in my view. It depends on what your thoughts and beliefs are. But let's say if I went out, I don't know, I'm just going to go out to December of 2028 as an example, and I can sell a. Right now the stock is at $95. Actually, let me go. I could sell, let's say, a $50 put as an example, and collect $1,500 right away. So $1,500. So I put up $5,000 to make the trade. If you're not using margin, if you put up all the cash, if you're selling a $50 put, this is just an example, guys. But these are the steps that I use, that I personally do to walk through these scenarios, right? So I have to have $5,000. By the way, you can use margin and not have to put up all the money, which is even better of a story. $1,500 gets dropped into your bank, your brokerage account, $1,535 to be precise, right when you make the trade. And your annualized rate of return is 13%. And what you're doing is, I don't want to say the word betting because it's not really appropriate, but you're kind of like betting on long term that stock is going to recover. So I would look at perhaps long term, if you're okay tying up your money for a long period of time, the stock would have to drop another almost 50% to make you have to buy the trade. But personally, I don't like to be stuck in something for long extended periods. So that's why I like weekly. Let's see, BE earnings after the close today. Yep, that's absolutely correct. Sigma new guy. This app is totally unique and gives you a huge advantage in picking the best option. Sorry, I had my iPad in front of me for a moment. Let's see, gives you a huge advantage in picking the best options to sell put or sell calls. Speaking from experience. $867 cash today in 45 minutes. Bravo. And you're absolutely right. Like, this app helps you find those trades. Like, the earnings edge is my favorite thing, right? So I can come in here and I can do a screener and I can run a scan. And what it's going to do is it's going to suggest really good straight trades in this module in particular that have earnings coming up, because earnings increases that volatility and I can get more bang for my buck, you might say, more premium for the risk that I'm taking. And then I can sort this if I want by price, or I can sort this by, alphabetical ticker. I can sort it by, earnings date and that kind of thing. It's 7-day free trial and it's $100 a month. Like, I don't know. I pay more for my gym membership than for this app. I forget what I pay for my gym membership. I think it's $240 a month, if I'm not mistaken. And by the way, and this is important, I have a gym in the building. I live in a like a condo complex, and I have a gym in the building that I live. But I choose to pay for CrossFit. I go to CrossFit, not far from me. A subscription, like a membership, because it holds me accountable to actually go to the gym and work out and get in the groove and that kind of thing. So yeah, I don't know, for whatever that's worth. Let's see. So Lorena says, cool, thank you. I was thinking of waiting for tomorrow's action. I think it's always better to be more conservative. I think conservative is always better because it's so easy to make money and harder not to lose it. And as long as you're locking in gains over and over and over again, like there's never anything wrong or bad with that. So good point. This is a weird, I'm like sitting on the couch. Usually I stand up during these live streams, so I feel a little bit like out of sorts a little bit. I was just chilling with my dog who's not feeling well and sitting in the sun, so that's why. Oh, sorry. I keep putting the iPad in front of you guys. Okay, so Joyce says, when you say buy 100 shares of BE today, do you mean at the market? So there's different ways that you can do it. So lots of ways to like skin a cat. So I was just showing an example of, let's say if you bought 100 shares at the market and then sold a covered call against those shares. That's what we call a buy right. So you're buying the shares and then you're writing a covered call that's expiring. And generally, Bloom Energy is probably not a great example to use in that case, because usually we do that on a ticker that's like trending up. And you're kind of like going with the momentum, going with the flow. So like, let's say, a stock is, let me give you guys an example. I'll just sort through this watch list and see, I don't know, what's up a lot. Let's see, Booking or HPQ. Let's look at HPQ because that's actually a super inexpensive ticker as well. So let's go back here and let's go to Trade Builder. And we're going to go to a buy right as an example. And I'm going to go to HPQ because it's up about 6% today. And so when something's up and if the ticker's up, the price of the call is up as well. And so you're moving with the momentum. So as an example, let's say I was to buy 100 shares and then sell an at the money call or the next strike over what I pay for it. Right now, HPQ is at $28.11. So let's say if I was to not sell a $28 call, but a $28.50, because I like to sell a call that's over my basis. This trade would cost $2,700 in capital because you'd be buying, 100 shares. And then you'd collect, this is paying $38 in premium. Your average, it doesn't sound like a lot. So here's the thing, guys. You don't want to just look at raw premium dollars. So $38, like sometimes people will say $38, like what is that? It doesn't even mean a lot. But you're only putting up $2,800. This says $2,773 because it's netting out the income that you're making on the call. So you're buying 100 shares at $28. You're selling a call right away. You're holding it for 3 days. And assuming that call gets assigned because you're going with the momentum, you're making 166% on your money. So that is kind of what I was talking about, Joy. Let's see. ET phone home, always buy with a limit order, never a market order. So that's a good point. So here's the way I do that. When I buy or sell stock, I typically will use a market order. I do check the bid and the ask spread before I do that. And generally with a stock that's actively trading, or traded rather, it's going to be a negligible thing. It's usually like 1 penny. Like it might be, actually we can look at this as an example. This probably shows the bid ask right here. So it's, well, this is the options contract. But when we trade a stock, let me show you here. Let's go back to HPQ that we're looking at. Let's see. Let me sort this. Oops, sorry about that. HHH, EFG, HPQ. Okay, so HPQ we can see, it's kind of small, so I have to I need some new glasses. It is bid, I'll just hover over it. It's 28.13 bid, 28.14 ask. So you see how generally it's like 1 penny in between. So when I buy or sell stock, I use a market order. When I buy or sell options, I use a limit order. So if we go back to this example, the bid is 0.38, the ask is 44. Personally, when I sell a contract, I would use like a penny under the mid price. So yeah, thanks for clarifying that. ET phone home. Henry, what are your thoughts on BE? I think we just talked about that. Henry says, I own MicroStrategy at $87. That's great. I mean, when I own stock, particularly when the stock is trading higher than where I own it for, I always have a covered call associated with that because I don't care about stock. I only use stock to create income. Income is the only thing I care about. I don't care about stock. I don't get married to stocks. I don't fall in love with them and like roll my calls that are working, correctly anyway because I want to keep that stock. Stocks mean absolutely nothing because it's a paper gain, paper loss. I care about income because income is what helps me like not have to go punch a clock somewhere, right? Arla says, hi, coach. Can I use this for covered calls as well? I presume you're asking about the app. Yeah, you can use this app for covered calls. This app is comprehensive, and I'm building new functionality to it every single day, and all the new functionality gets pushed out all to the app users. Like, there's nothing that you have to do. You still pay the same price, and you get the added functionality. And then when I have price changes, you don't pay a higher fee as well. So you can find trades. So there's scanners, not like other, like, there's a million scanners in the marketplace, none like this, like nothing like the Earnings Edge as an example, where you can scan upcoming tickers that have upcoming earnings. And just to show you, let me just go back and show you exactly what I'm talking about and why this is unique. But yes, and answer your question, you can use it for covered calls. So I'm just going to click into, I don't know, just something that pulls up quick. Biogen. Oh my gosh, I haven't traded Biogen is like, I haven't looked at this ticker in I don't even know when. I used to trade this a long time ago, I don't know, 10 years ago, but I haven't looked at it in a really long time. So this app will show you, okay, well, here's the stock, right? And here's the earnings date. So that's tomorrow, just as an example. The market anticipates a 5.5% move. Historically, it moves 2.3%. If you were to sell a put, you want to use a put that's below what the market anticipates it to go, because that's what gives you like a cushion, right? So like, here's the thing, like when we sell a put, we want to make money, but in an ideal situation, we want to like make money for free and not have to buy the shares, because if you could just keep cash and not have to buy the shares, that is like the best outcome. So this app helps you understand and determine and see, like, otherwise, how are you going to know that the market anticipates a 5.5% move? You're not going to know that. You need to know how to put that logic into a formula and build your own spreadsheet. This app does it for you. And then it also does it for you, like, okay, if you sell this particular contract, 731, 192.50 put, here's what it's getting paid, here's how much capital you need, here's your annualized rate of return, and oh, by the way, over the past 5 years, it's gone up 11 times versus down 9, and here's where it's done post earnings. Like this for $99, man. Oh my gosh, like I can't even believe the people that are on this channel watching these live streams who have not yet subscribed. I can't even believe sometimes the people that email me, thank you, changed my life, and so many amazing things, but you're not using this app. We have a lot of app subscribers, but if you're not using this, man, you are like missing the boat. That's all I gotta say about that. Let's see. What delta do you typically go for? It depends on how okay you are in buying the shares. So that said, I don't really look at delta when I sell a call. When I sell calls, I just sell a strike price over what I paid for the stock. I don't care about really a capital gain. I just want to make income, right? When I sell a put, I mean, usually it depends. Like if it's If it's a stock with an upcoming earnings and it has a lot of volatility, then I go kind of far out. And then I look at the annualized rate of return, and I look, okay, oh, that's a 10 delta, and I'm making 50% annualized. Well, that's a pretty good deal. 10 delta, 10% likelihood, 50% annualized return. And also it depends on if you already own shares. If I already own shares of something, then sometimes I'll go a little closer to where it's trading if I'm underwater on some of those shares that I have. So that's a good point. Let's see. So Henry says I only use limit orders. Arla says I use market as well. Here's the problem with a limit order. You could put a limit order and then not get filled. So if it's a penny difference, like for stock as an example, and it's a penny between the bid and the ask, like a penny is a like I don't know. Like we don't even use pennies anymore, right? So what's the point of putting a limit order in? That's kind of how I look at it. I try to make things as easy as possible because easy things are replicatable. Things that are hard or confusing or, a pain in the neck to do you're going to be less likely to do and do successfully. So that's kind of how I look at it. Stir up your purpose. I like that name, Stir Up Your Purpose. Stir Up Your Purpose says this: when I sell a put 80% of the time, I never sell at the ask, but slightly above the ask, especially if volatile. So yeah, I mean, I try to, when I put my order in, there's a little bit of a finesse to it. Like, I try to sell a contract below the mid price and then, be more likely to get into the trade. I don't ever want to chase a trade. So I've been trading a really long time, and I've done, countless trades over my lifetime. And I find it frustrating. Sometimes when I put a limit order in that's kind of like aggressive and maybe I'm trying to make an extra dollar or something, I would rather miss $1 and get in the trade than have to chase it going down. So that's kind of how I look at it. Again, it's whatever works for you, right? So I'm just here kind of saying, hey, this is what I do. This is how long I've been doing it. This is how I do it, and it works great. And then you have to make your own decisions. Sigma New Guy, life-changing app. Man, this is a life-changing app. And you can connect your broker dealer so you can see the positions. You can track your trades through the trade journal. You can see the realized gain loss. You can sort by here's my realized gain loss, and I just want to see what I've made in options, not necessarily stock, or what have I made in this ticker here as an example. And it pulls everything up for you. And again, it's not just finding a trade like a stock scanner. It's doing all these other things. And then also there's margin on here. So the most important thing, man, if you're trading with margin, you got to get your act together. Nobody trading with margin ever knows what they're doing. I'll just say it like that. They look at buying power. They never look at where they would sustain a margin call. So as an example, I built margin. This is a margin account, and I built margin functionality where I can, and even on a non-margin account, you can simulate price drops. Okay, well, if my tickers all drop 24%, what happens? Am I going to incur a margin call? That's super important if you're trading margin. Where's that going to put my positions? What's going to get assigned? That kind of thing. Where's that going to put my market value? So it helps you understand sort of what could happen and what the effect and the consequence would be. And then also you don't only have the ability to do a drop across all your tickers, but you want to say, okay, well, what if Oracle dropped 20%, but SMCI went up 5%? How does that look? And then you can kind of see all of those numbers here. Rarome says, do you have a tutorial on the app? So thank you for asking that. So first of all, I am in the process of creating tutorials that walk you through that. But in the meantime, I have something even better. Every Saturday morning, I have free office hours for app subscribers. So we've been doing this for the past few weeks already. It's amazing. It's at 9 o'clock in the morning Pacific time. And what we do is we walk through all of this functionality. And then also, if there's time, and actually, honestly, we just go however long it takes. So I know this past Saturday, I think we went an hour and a half, maybe an hour and 15 minutes, and just people had some extra questions. You can ask questions about your own account. I mean, the intention is to walk through functionality of the app, but also like wherever you guys need help with your trading. So there's that free office hours every Saturday. And before I record the tutorials, and I've also done this with a lot of people, if you want me to do a walkthrough one-on-one, I'm happy to do that as well. I'm telling you, there's no better way that you're going to spend $100 a month in the market than this app. I promise you, it's just not possible. If you're a trader, if you're messing around and you just hopped on this channel because your neighbor was talking about trading options and you don't really know what it is and you're just sort of kicking the tires, that kind of thing, and you're not sure what you're doing, then don't spend $100, because why would you do that, right? But if you are already trading, number one, you should have this app. Number two, if you want to be trading, you should have this app because it's going to help you. You spend $100, what did Sigma New guy say? Let me scroll up on my things. He made $867 cash today in 45 minutes. He has the app. $800, and that was in one day. Some positions. I mean, it's all about leveraging what you get for what you pay. Spend 100, make 1,000. I don't know, whatever those numbers are. It's like mentorship. People that pay me okay, $5,000. We work every day, 5 days, and I show you a few things, and then you take that knowledge and make $10,000-$15,000 with it. It's leveraging what you're spending. So yeah, hopefully that answers your question. Let's see. Arla says, you are right. I learned a valuable lesson with margin. Everybody blows up their account on margin. It's like an inevitable. It's not like if it happens, it's like when it happens. I've actually blown up a few accounts over almost 30 years trading using margin. And that is one of the things that really prompted me to put these numbers in place into an app that I can use. First of all, I mean, I built this app for myself, and then it's okay, this is amazing. Other people can use this, and I'll make another revenue stream so I can help people. How I feel like my life is blessed. How beautiful is it when you can help people and make money at the same time? So that's sort of where this app really came from. Is it really, because I'm conscious about margin. So yeah. Anyway, 12:46. I try to keep these to 30 minutes, but every week every day rather, it seems like we go 45 minutes anyway. Joy, I don't want to miss sometimes I just skip right through. Can you show us what the whale screen is for? I haven't really looked at that. So I can go over this on Saturday, Joy. I know you're an app user as well, and so we can do that. I created this app a long time ago, Follow the Whales. If you went on the App Store, you would see this app. I haven't really updated it in a while on the App Store. But this is when you're trading something, and I'm going to spend some more time to really explain this a little bit better. But when you're trading something, you really should know who the insiders are that are trading that same ticker. So an insider is like an officer, director, controlling shareholder of a publicly traded company. The law, or I don't want to say the law, the rule, right? The investment rule, the requirement is that insiders disclose their buys and sells within 48 hours of them making the trade. So in other words, let's say Jeff Bezos buys some, who's he, Amazon, right? He buys some Amazon stock, or his wife, I don't think he's married anymore, but let's say he was married. His wife buys some Amazon stock or whatever. Even if it's 1 share, 5 shares, whatever, they have to disclose it to the SEC within 48 hours, right? Because the purpose is to create a fair and balanced marketplace. So you could, if you wanted to, go to the SEC Edgar page, and you can search the filings. So let me go on Amazon as an example. And I'm going to go to ownership. Now, this is all the filings: 8K reports, 10Q reports, annual reports, quarterly reports, a lot of information. But you could go to the Form 4s, which a Form 4 will show you kind of okay, well, what happened? So this person, Douglas Harrington, he is the CEO. He, let's see, S. Usually D is for sold. What is S? Maybe S is sold. I'd have to update. I haven't really looked at some of these raw forms. But it shows you what they did. Here's the transaction date, whether they bought or sold it, how many shares. Oh, D, here we go. D means sell. He sold 1,000 shares on 7/1 at this price right here. And the purpose of that is because this. When big people buy and sell blocks of stuff, it moves the market. So that's really what moves the market down or up is like, people go in and sell a bunch of stock and the stock goes down. People go in, buy a bunch of stock and the market goes up. So you could look at this right here, or you can look at it here in this app. So for example, and what I did was I scrub it and I make it easier for you to understand it, and then I add some AI kind of analysis to it. And so like, for example, I take out the sometimes officers, director, and insiders are trading via stock options, and that's not really as relevant as if they're using their own money to buy or sell stock. So I scrub that data out to only provide the relevant stuff that would help you make educated decisions. So this page kind of shows you like, here's the market cap, some other information. Here's a bunch of, and you can click into these, who's buying, who's selling. There's like an AI analysis of whether it's a bullish or a bearish trade, and then like an analysis of why, right? So I had created this app a long time ago on the App Store, but it doesn't have this functionality here, and I kind of expanded it here to this functionality. So that's what that is. Let's see, one more question, then we're going to jet. Do you close out your cash secured put early at say 50% or let it ride to expiration? That's a really good question. Ryro or Ryrom61, you ask good questions. I appreciate that. Personally, I close my puts because I want to take the risk off the table, and I don't want tail risk. So what I mean by that is like, as time goes on, let's say I sell a put and I make $100, and then it's about to expire, and now it's the stock, that contract is trading for like $1 or $5 or whatever. I just spend the $5 and buy it back and take that risk off the table, because what if something significant happened, unexpected but significant, like, I don't know, war breaks out and the market crashes, and then I have to buy that stock, when meanwhile I could have just spent the $5 to flatten that out. So personally, I buy them back. Now, a long time ago, like I would say, I've been doing it like this for a long time, probably, I don't even know, maybe, I would say for sure, like since the 07, 08, like meltdown, financial meltdown. Prior to that, I used to just let them go until expiration and not buy them back. But I found that, it's unlikely that something big would happen, but if it did, it could be a significant event. So I like to take that risk off the table. So hopefully that answers your question. As a wrap up, I want to say thank you for coming to the live stream. These also just a quick housekeeping. If you missed the live stream, it's in the videos here in YouTube. So I mean, it's here if you go to the live page. And then recently I started making changes to the prior live streams. So I changed the thumbnail, and then I changed the description, and then I added chapters inside of each video that help you kind of like maybe skim through or find a point that maybe you listened to a live stream, I don't know, a few days ago, and you're trying to think of like, what was that thing that I listened to? I'm trying to make it easier and more organized for viewers to take a look at that. So keep that in mind. Anyway, cool. So thank you for coming. I appreciate you guys coming. I'm not even sure how many people we have on here. Come back tomorrow, 12 o'clock. We talk all about options. If you're interested in the app, you're just going to go here. Let me just show you real quick. You're going to go to apps.cressivo.com, and it's in the description too. And you can, if you've never had an account before, you can sign up 7 days for free, and then it's pay as you go, $99 a month, pay as you go. Cancel whenever. You can connect your broker dealer. It's got amazing functionality. And if you're interested in one-on-one mentorship, I don't work with a lot of people, but for some people it makes sense. And you can reach out through my website. If you go to cressivo.com, you just go here, mentorship, and then you can kind of take a look about it, and then you can go through a couple questions, and it sends me an email, and then we kind of schedule or have a chit chat in the meantime about how that might work. Most people, I'm a big believer in mentors, right? Like I had Tony Robbins as a mentor for, I don't know, 3 years. He was really expensive, so I was able to gratefully to do it for 3 years, and he was life changing. And there's a life coach kind of mentor, Amy, that I've had a long relationship, maybe I don't even know, 10 years, 8 years, something like that. Invaluable for me. I find that it's, having a mentor can be night and day for what you're looking to accomplish and to help you get to where you want to go. Anyway, hope that helps. I know a lot of people said thank you. You're welcome. And I will see you guys tomorrow, same time, 12 o'clock. Cheers for now, and happy trading.